Thank you, Chairman. I have a number of questions, and I'd like to inquire if there'll be time for a second round in order to accommodate them.
I think with the number of people we have here, we can have a second round, but I do have an 11:30 meeting I have to go to. Well, no, he's not, he means later. Go ahead with your first round.
Okay, can we restart me?
Yeah, start these 5 minutes over again.
So let me start with Ms. Arbes. First of all, welcome. Thank you for the good meeting in my office. As you'll recall, in the office we discussed the problem of what in HHS CMS Arcana we call the rural imputed floor. And as you know, that drives reimbursement to hospitals and providers in areas. And as you further know, when Ms. Verma came in as administrator, she unilaterally undid the rule for imputed rural floor under which we had been operating. And here's the effect that happened. I showed you this map when we were there together. Here's Rhode Island, here's Massachusetts, here's Connecticut. We're the geographically smallest state, so these are not big differences. If you go from Rhode Island across the border here to St. Anne's Hospital, it's probably a 5-minute drive. If you go to Charlton, it's maybe 15. If you go to Sturdy, maybe 15 or 20. These are hospitals that are very close to our border. Because of what CMS Administrator Verma did, these hospitals in Massachusetts get 1.2868 as their wage index. We get 1.03. I've been unable to get a serious or straight answer out of Administrator Verma about this. Why a 25% differential is appropriate in hospitals that close to each other. And if you go from our east border to our west border, it gets worse. Here's Westerly Hospital in Rhode Island. It's less than 15 minutes down the road to Lawrence Memorial. Here, the margin favoring the Connecticut hospitals, 1.3525. It's a 30% differential. Can you explain under what circumstances it makes sense for hospitals within an hour's drive of each other to be reimbursed with differentials in reimbursement as great as 25 or 30%? No, you cannot. I understand that, and it's an unfair question to you because this is not your job. But to the point that the chairman and the ranking member made, trying to get information or response out of that organization, out of Administrator Verma's CMS, is so infuriating that I now have to be having this conversation with you, a good and decent person who is doing a different job, because I've got no other opportunity. And I've got hospitals for whom this really makes a difference. It's a $25 million hit that one hospital took. That, to me, is unfair. And Administrator Verma has got FOIA requests from our hospital association that she has not answered. If you could see to getting that done, that would be helpful. And what we were told when we first questioned this, knowing full well what the damage was going to be, this unilateral decision that she made, what we were told was, oh, this is part of a broader reform of the imputed rural floor. Ms. Arbes, we have seen no sign of any broader reform effort. I don't think we've been told the truth. I don't think we've been treated fairly. And I think information requests from hospitals that are affected by this have been stonewalled by Ms. Verma. As you can see, I am very angry about this. We are not being treated fairly. There is no good and legitimate reason, and fair questions aren't being answered. So could you and whoever is here from the organization as your minder and handler, please take that back. I spoke about it with Secretary Azar just this morning in the briefing you discussed on coronavirus.
Yes, sir, you have my word. I will take it back.
Very well. And I think you kept my copy of this map, didn't you?
Yes, sir, I did.
So you have that. Very good.
Take it back internally.
So just a quick question for Mr. Kranbuhl, then we'll come back to you. 45Q. the carbon capture regulation. This thing passed us practically unanimously. Everybody is for it. It's been sitting over there for 2 bloody years. Can you please kick loose that regulation?
I appreciate the concern you have. I'll do my best and certainly take it up with our team, sir.
Can you explain to me why it takes 2 years to write that regulation?
I cannot. I'm not on our tax policy team, sir.
I think even if you were on your tax policy team, you could not explain why it took 2 years. Thank you. Mr. Kranbuhl, as you know, we talked in my office about the financial sector ringing right now with warnings about climate change financial impacts. And I have brought this to the attention of my colleagues in the July 18th, 2018 letter that I gave a copy of to you when we met. I sent another letter in December of 2019 to all the members of the Senate Banking Committee warning of these. I've provided every colleague the binder that I gave to you of reports relating these various economic risks. They include, I'll just go through a couple right now, the Bank of International Settlements Green Swan Report says that central banks, regulators, and supervisors have increasingly recognized that climate change is a source of major systemic financial risks. Is the phrase major systemic financial risks one that is a serious phrase in the financial world?
It is a serious phrase, yes, sir.
It goes on to say climate catastrophes are even more serious than most systemic financial crises, and that exceeding climate tipping points could lead to catastrophic and irreversible impacts that would make quantifying financial damages impossible. Catastrophic and irreversible is self-evidently dangerous language, is it not?
Yes, sir.
BlackRock recently wrote to the financial community that in the near future and sooner than most anticipate, there will be a significant reallocation of capital. Indeed, he forecast an entire change in the way financial markets operate, did he not?
Yes, sir.
Yes, he did. McKinsey has put out a report. Climate change could make long-duration borrowing unavailable, impact insurance cost and availability, and reduce terminal values and trigger capital reallocation, asset repricing. Are those also significant warnings?
Yes, sir.
The Bank of England has warned that the combination of the weight of scientific evidence and the dynamics of the financial system suggests that in the fullness of time, climate change will threaten financial resilience and longer-term prosperity, and that in particular investments in fossil fuels and related technologies may take a huge hit. And it's not just the Bank of England. 34 central bank presidents got together to warn the financial community, and I quote here, estimates of losses are large and range from 1 trillion to 4 trillion when considering the energy sector alone, or up to $20 trillion when looking at the economy more broadly. Average global incomes may be reduced by up to a quarter by the end of the century. Are those serious warnings as well from 34 central bank presidents?
Yes, sir.
Cambridge University recently proposed that the existence of a carbon bubble could discount global wealth by US $1 to $4 trillion, a loss comparable to the 2008 financial crisis. Freddie Mac, which is not an environmental organization, described just on coastal property value loss that the economic losses and social disruption may happen gradually, but they're likely to be greater in total than those experienced in the housing crisis and the Great Recession. And I didn't have time to get it made up because it just came out. January 2020 report from the Stanford Graduate School of Business notes that the financial risks from climate change are systemic and singular in nature. And I quote here, global economic losses from climate change could reach $23 trillion, 3 or 4 times the scale of the 2008 financial crisis. For those of us who weathered that, that's a pretty serious warning, is it not?
Yes, sir.
So my question to you, given that even Federal Chairman Powell has said, I think the public has every right to expect and will expect that we will ensure that the financial system is resilient and robust against the risks from climate change. What are you doing? At Treasury, it seems to me you are ignoring these warnings, and if so, why? And I would be delighted to have you take time answering it now, but I also would make that a question for the record so that I get as full and fair and complete an answer as I can. Go ahead.
I appreciate your passion on this topic and this important issue.
It's not just my passion, it's frightening warnings from people who know their stuff and aren't even environmentalists.
As Secretary Mnuchin said, climate change is one of a range of important environmental issues that becomes an economic issue because there's no question that environmental issues impact our economy. I hope that we can all work together to help solve this challenging issue.
Well, let's take that as a QFR then, if I may, so I can get a more specific answer to my specific questions. 1, does Treasury take this seriously? 2, what demonstrations are that the Treasury takes this seriously? 3, is Treasury ignoring this problem? 4, is Treasury ignoring this problem because of pressure from the fossil fuel industry? And if none of that is true, what are you doing to protect our financial system against the catastrophes that are so clearly warned of by so many sources? Fair enough question?
Yes, sir.
Thank you.